Hey, welcome back to the channel, everyone. Before we jump in, make sure you smash that like button, subscribe if you haven't already, and turn on the notification bell so you don't miss any of our future deep dives. Your support really means a lot and helps this community grow stronger each day. Now let's dive right into the action, because there is a ton to unpack about Opendoor, the broader market, and the big developments we're seeing this week. And as always, remember, this is not financial advice. I'm just sharing information and analysis for educational purposes only. Always do your own research, consult with a licensed financial advisor if you need to, and invest according to your own risk tolerance and goals. It'll be very interesting to see if trading volume can actually get above 1 billion shares. That would be a massive milestone in itself. Volume, for those who are newer to following stocks, is one of the most important indicators when we analyze price movements. It's not just about the stock price going up or down. What matters just as much is the conviction behind those moves. When we see huge spikes in volume, that tells us big money is moving, institutions are active, retail traders are piling in, and sometimes it can even signal the start of a longer-term trend. If Opendoor breaks through that billion-share trading volume mark, it won't just be a statistic. It will be a psychological milestone that puts this stock firmly on the radar of traders across Wall Street and beyond. Now, to put that in perspective, hitting 1 billion shares in daily trading volume is something that only a handful of companies in the entire stock market ever manage to achieve. We usually see numbers like that when there's a frenzy, whether that's meme stock rallies like GameStop or AMC in their heyday, or major events around tech giants like Tesla or Apple. For Opendoor, a company that many investors still consider niche or even speculative, reaching that level would be a sign that it has moved out of obscurity and into mainstream trading territory. And with higher volume often comes higher liquidity, tighter spreads, and more reliable price discovery. So keep an eye on that number, because it really could set the stage for what comes next. Starting off with the macro data, let's talk about CPI, the Consumer Price Index. This is always a headline-grabbing number because it's the most widely followed measure of inflation in the United States, and in many ways it shapes how the Federal Reserve approaches interest rates. For August, the CPI came in at 0.4% month over month, compared to forecasts of 0.3%. On a year-over-year basis, it registered 2.9% compared to expectations of 2.8%. Now, on the surface, you might look at that and say, okay, inflation is hotter than expected, so that should be bearish for the market. But the truth is, it's more nuanced than that. If you dig deeper into the report, you'll see that a lot of that upside surprise came from energy, which was up 0.7%. Energy prices can be very volatile. They move based on global supply, geopolitical events, and seasonal demand. If you strip that out and look at the core basket, other categories actually showed declines. That means the underlying trend in inflation isn't as concerning as the headline number might suggest. In fact, it shows that we're still on a path where inflation is cooling in most parts of the economy. This matters because the Fed doesn't just look at one number, they look at the bigger picture. And that bigger picture suggests inflationary pressures are easing, which keeps the door open for rate cuts down the line. The market's reaction was fascinating. Initially, when the data hit the wires, there was no immediate movement. In fact, it took around 30 seconds for traders to fully digest the information. That may not sound like a lot of time, but in the world of high-frequency trading and algorithmic strategies, 30 seconds can feel like an eternity. At first, there was some hesitation because traders saw hotter than expected inflation and assumed it would be negative. But once the breakdown came out and people realized energy was the main driver, sentiment shifted. Within minutes, we saw stocks moving higher across the board, and that bullish tone carried into the session. This is a great reminder of how important it is not just to react to headlines, but to actually understand the context. Smart money doesn't just buy or sell on the headline number. They analyze what's driving the data, what it means for the Fed, and how it affects broader market psychology. And in this case, the reaction ended up being bullish, which gave momentum to many individual names, including Opendoor. Now, let's turn specifically to Opendoor, because this is where things get really exciting. The company has been reacting strongly to news that came out yesterday. They announced PIPE financing and also introduced some big updates from leadership. And just this morning, at 6:30 a.m., they submitted an 8K filing with the SEC that gave us even more details. If you're not familiar, an 8K filing is essentially a current report companies must file to announce major events that shareholders should know about. And this one had some bombshells. The headline takeaway from the filing: CEO Carrie Wheeler, often referred to as Cass, will be taking a base salary of just $1. That's right, just a single dollar. There are no annual cash bonuses listed either. Instead, her compensation is structured entirely around performance-based equity awards. This is the kind of news that grabs investor attention because it shows a huge alignment of interests between management and shareholders. Let's break down what those performance awards actually look like. The first milestone is tied to the stock price staying above $6.24 for 60 trading days after the vesting date. That's already been surpassed since Opendoor is currently trading around $10, but it still shows how they structured the incentives to ensure their sustained performance rather than short-term pops. The second package is even more ambitious. It's structured in multiple stages with goals tied to the stock hitting levels like $9, $17, $21, $29, and even $33 over time. Think about that for a second. These are not small moves. They represent massive upside potential if achieved. For example, moving from $10 to $33 would more than triple the stock price. And if that happens, shareholders will be ecstatic. But more importantly, it shows that management is incentivized to think long-term and to focus on growth strategies that can actually unlock that kind of value. This is exactly what has investors so excited. With the stock currently hovering around $10, the CEO now has a massive personal incentive to deliver real long-term growth. It's not about collecting a fat paycheck regardless of how the company performs. It's about building shareholder value. This move demonstrates extreme confidence and commitment from leadership, and Wall Street is paying attention. In fact, I would argue that more companies should adopt this kind of pay structure. Too often, we see CEOs in other industries receiving multi-million-dollar salaries, huge bonuses, and golden parachutes, even when the company is underperforming. It's frustrating for investors because it feels like management is insulated from the consequences of poor performance. But here, Opendoor is saying, if the company wins, the CEO wins. If shareholders lose, the CEO loses too. That alignment builds trust and is a rare but refreshing approach. And that's not all. The 8K filing also included updates about new board members and details about the PIPE financing. For anyone unfamiliar, PIPE stands for Private Investment in Public Equity. Essentially, it's when institutional investors inject capital directly into the company by buying shares, often at a negotiated price. This provides Opendoor with additional resources to fund its operations, expand into new markets, or strengthen its balance sheet. And when respected institutions are willing to commit capital in this way, it adds credibility and signals confidence in the company's future. So, between the new leadership compensation plan, fresh capital from PIPE investors, and the addition of new board members, the filing was stacked with positive developments. It's no wonder the market has reacted so strongly. Now let's talk about short interest, because this is another big piece of the puzzle. Despite the stock's recent gains, there's still a significant amount of shares being shorted. Shorts have already been burned badly in recent weeks as the stock has rallied, but many are stubbornly holding on to their positions. Short interest can act like fuel for the fire. If the stock keeps moving higher, shorts will eventually be forced to cover, which means buying back shares at higher prices. This creates what's known as a short squeeze, when short sellers essentially become buyers and drive the stock up even more. We've seen this play out before in other names, and while it's impossible to predict with certainty, the ingredients are definitely there for Opendoor. Heavy short interest, bullish momentum, and positive catalysts. That's a recipe for volatility, and in many cases, for upside spikes that can take everyone by surprise. Options activity is also painting a bullish picture. Traders are loading up on call options, which are contracts that give them the right to buy shares at a set price in the future. When we see a heavy skew toward calls compared to puts, it's a strong sign that sentiment is tilted toward further upside. And given the massive turnover we've seen today, around $9 billion worth of shares changing hands, it's clear that this is not just a quiet retail-driven move. Institutions, funds, and larger players are involved, and they're positioning for more gains. Finally, let's circle back to volume. With trading volume approaching 1 billion shares, this is nothing short of remarkable. It shows just how much attention Opendoor is commanding in the market right now. This isn't a sleepy, low-volume stock anymore. It's front and center on watch lists, it's being actively discussed in trading communities, and it's becoming a symbol of high-risk, high-reward opportunities in the market. So to wrap things up, this is truly an exciting time for Opendoor and for anyone following the stock. We've got positive macro tailwinds with inflation data that looks better once you dig deeper. We've got groundbreaking leadership decisions with the CEO aligning compensation directly to performance. We've got fresh capital from PIPE financing and new board members adding credibility. We've got shorts still hanging on despite mounting pressure. And we've got options activity and volume that suggest big money is betting on more upside. The question now is, what do you do? Are you buying here, holding through the volatility, or locking in profits after the big run? Are you looking at this as a short-term trade or a long-term investment? Whatever your view, make sure to drop a comment down below. I'd love to hear your thoughts. If you found this breakdown valuable, don't forget to hit that like button, subscribe to the channel, and share this video with others who might be following Opendoor or curious about what's happening in the market. Thanks for watching, and I'll see you in the next one.